Bank of America's Q1 2026 13F filing revealed a significant shift in its crypto ETF portfolio, with Bitcoin products dominating the allocation. The bank reported roughly $53 million in total crypto ETF exposure for the quarter, with BlackRock's iShares Bitcoin Trust leading the pack. This position alone accounted for nearly $37 million of the bank's reported exposure, highlighting a clear preference for Bitcoin over other digital assets. The filing showed a notable increase in the number of IBIT shares held by Bank of America, rising from 719,008 in the previous quarter to 972,590 by the end of Q1 2026. This increase suggests a growing institutional confidence in Bitcoin as a digital asset and a strategic move to consolidate exposure within a single, well-established ETF. Alongside the iShares Bitcoin Trust, Bank of America also held smaller Bitcoin ETF positions across other providers, including Bitwise's BITB, Grayscale's Bitcoin Mini Trust, and Fidelity's FBTC. These positions, while smaller, still contributed to the overall Bitcoin-centric allocation. The bank's exposure to Ether and Solana ETFs, however, saw a decline in the same quarter. Only about $1.06 million was allocated to BlackRock's ETHA, and Solana-related ETFs had even lower exposure. This shift reflects a broader trend among institutional investors to prioritize Bitcoin over altcoins, at least for now. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The decision to scale back exposure to Ether and Solana ETFs may be influenced by market volatility, regulatory uncertainty, or a strategic reallocation toward a more liquid and stable asset. The move also aligns with broader market sentiment, where Bitcoin often serves as a proxy for crypto exposure due to its market capitalization and regulatory clarity. The iShares Bitcoin Trust's dominance in the bank's portfolio is not surprising given its status as the largest Bitcoin ETF in the U.S. The fund's liquidity, institutional backing, and regulatory approval make it a preferred vehicle for large-scale investors. The increase in IBIT holdings suggests that Bank of America is not only maintaining its position in Bitcoin, but actively building it, which could signal a longer-term commitment to the asset class. The bank's Q1 filing also included minor positions in other Bitcoin ETFs, indicating a diversified but still Bitcoin-focused approach. These include Bitwise's BITB, Grayscale's Bitcoin Mini Trust, and Fidelity's FBTC, with total Bitcoin ETF exposure across all providers reaching about $53 million. The smaller allocations to other Bitcoin ETFs suggest a broader strategy to spread risk across multiple providers while maintaining a core position in the largest and most liquid fund. In contrast, Ether and Solana ETFs held only a fraction of the exposure compared to Bitcoin products. This could be due to lower market confidence in altcoin ETFs or a lack of regulatory clarity surrounding these assets. The bank's reduced exposure to Ether and Solana ETFs may also reflect a broader trend among institutional investors to consolidate their crypto holdings in fewer, more liquid products. The shift in allocation has implications for the broader market. As one of the largest banks in the U.S., Bank of America's decisions can influence investor sentiment and market direction. A continued preference for Bitcoin ETFs could reinforce Bitcoin's status as the dominant digital asset and potentially drive further inflows into the largest Bitcoin ETFs. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The other hand, reduced exposure to Ether and Solana ETFs could signal a lack of confidence in the broader crypto market or a strategic reallocation toward a more stable asset. The next signal to watch is whether other large institutions follow Bank of America's lead and shift their crypto allocations toward Bitcoin ETFs. If this trend continues, it could reinforce Bitcoin's position as the go-to digital asset for institutional investors and further solidify the dominance of Bitcoin ETFs in the market. Additionally, any changes in regulatory policy or market conditions could prompt a reevaluation of these positions, making it important to monitor subsequent filings and market developments.